as mainstream media continues to roast Tesla for missing targets and demand issues. In reality, Tesla has become a money-printing profit machine. Hello guys, this is your host Otis, and you're watching Sustainable Truth. So going back to 2013, just before Tesla IPO, Jim Cramer said this.
Tesla's a sell. You don't want to own this stock. You don't want to lease it. Heck, you shouldn't even rent the darn thing.
This has not aged well for Cramer at all. In 2018, Business Insider was already scaremongering Tesla's bankruptcy, but in all fairness, they were not totally wrong. It was a tough time for Tesla ramping up that Model 3. In fact, if we look at their profitability after expenses, Tesla was losing money all the way up until the end of 2019. So let's come back to more current times and look at 1 year to date. Tesla's Q3 2021 net operating income was 1.68 billion, and in recent Q3 2022, a year later, it's already 3.29 billion in a single quarter, basically doubling their profit. So what are the key drivers for this? Well, for sure, the asking price of cars has a big impact, as Tesla kept rising their prices due to insane demand, as well as economies of scale from ramping up new factories and optimizing and expanding older ones, as well as logistics and shipping. Tesla has focused on more cost savings towards the end of the quarter for car shipping to keep the flow steady at reasonable prices, and shipping some cars in the next quarter, as well as ramping up lines with gigacastings also, and many other small things they just keep optimizing on, sensors, parts, etc. Well, okay, so the whole industry is ramping up EVs. They're going to flood the market. 2023 is just around the corner. Recession is coming. What's going to happen to the profits? Well, it's true that we are probably looking at an economical slowdown next year due to current things going on around the world. So demand will go down somewhat for electric cars as people will spend less. This will lead to Tesla lowering prices to keep the demand strong. But the fact is that they have so much leeway now with industry-leading profit margins. At the same time, they will not reduce production. They will lower prices and do more volume. This should keep the profits up. On top of that, there is still room for improvement in manufacturing side, as well as cost of batteries are going down predictably and will continue to do so. If for whatever reason Tesla will slow down car sales in the near term, they can shift their focus to energy storage and use up the battery capacity in that way. In the previous quarter, Tesla recorded the highest energy storage deployment by quarter, and they just built a dedicated factory to produce those packs. So it's not a speculation, they are executing on it right now. Let's have a look. At the moment, the margin on Tesla's energy storage has not been great. With this dedicated plan for mass production, they can achieve better economies of scale, and I'm expecting to see improvement in margin for it. Cybertruck. Cybertruck will be another product to start selling in the middle of next year. This will require a lot of fine-tuning as it's a new manufacturing technology. It's hard to say what kind of profit margins we will have in the beginning, possibly even negative. Looking at the past, we can see that Tesla struggled to make radically new technologies work profitably at first, but adjusted and made it after all. I think Cybertruck will be similar. But I give it some benefit that Tesla was battery constrained and they had some time to work on these issues ahead of time as well. Of course, the main issues in progress will be certain once the mass production begins. That's the hard part. But the main things to consider would be 1. New exoskeleton mass producing possible issues. 2. Possible new technologies such as waterproof chassis, steer and brake by wire. Possible issues there also. But then, Number 3. Almost no paint shop required as it's all stainless steel. Massive savings on that. Number 4. Gigacasting chassis using 9,000 ton gigapress. Massive savings on robots and body shop. So as you can see, there are both advantages and disadvantages. Tesla have a track record to overcome those types of disadvantages in the past. Be it not always on time, that's for sure, but they have done it. Full self-driving. We also have other income streams like full self-driving beta. However, The timeline is not that clear. Tesla promised major developments by the end of the year. One thing is certain. If you look at the progress of full self-driving over the last year, we can clearly say that it has improved and will continue to do so. So it's only a matter of time until it will get there. We will see whether it will become a mainstream consumer solution or a robotaxi fleet in itself. Either way, this will be a significant increase in profits, as the company will lean more into software operations. So to summarize, mainstream media has always fear-mongered about Tesla and will be for the foreseeable future. Tesla has been making profit since end of 2019. Tesla since has been growing profit and had doubled it in just last year. They have more room for optimization and improvement. Upcoming economic downturn might have implications, but the company has a lot of wiggle room in price. Cost of manufacturing is going down predictably. New products pose challenges but also opportunities for more profit. Guys, thank you so much for watching until the end. If you enjoy, hit like and subscribe. It helps YouTube promote this content. I want to provide value to as many as I can, so this helps a lot. Any thoughts or feedback would be much appreciated in the comments below. Thanks again, and I'll see you on the next one.